All right, the S&P 500, the Nasdaq 100, we're going to get right into what's happening here on the market and the key data you need to be expecting. Now, yesterday we went over key targets going into today, and you hit those levels to a T. Specifically here on the Nasdaq, right to supply. Boom, hit it, rejected. Now, going into S&P futures, right to 4,100. Boom, you hit it a little bit over 41.10, a little bit off, and then you got rejected and you kind of held there all day. Now, the question is this a rejection or is this consolidation before another breakout? And that's what I want to talk about right now. But before we get into that content, I ask you to consider doing two things: liking and subscribing. Every single day I make videos for you so you are prepared and you understand what to expect in this market and you're never taken by surprise. Let's get started. So first things first, let's go over some data. Let's go over some big news, and then we'll get into the charts. Now, first things first, tomorrow, what do we have going on? Non-farm payrolls, one, and then we have the unemployment rate. I think this is going to be a little bit tricky, and this weekend on Sunday, I will have a new video published for y'all, so y'all know what to expect with this. Because I believe this PAL meeting and the Powell speech that he went over was very influential, specifically with what's happening in the market. And I think the tone has shifted, and I think you need to understand a few things about this, because specifically with unemployment, yes, unemployment has basically been going down for 2 years, like rapidly, right? Now, it's obviously bottoming out, and we expect unemployment to go up, and we need it to go up. But I do want to say something. You don't need it to go up rapidly right now, because Powell basically said it's okay if unemployment stays where it's at short term, because eventually it will drop. And I'm going to go more into this in the video this weekend, but he basically said because unemployment is where it's at, the labor market is strong, and that is holding the economy up. And because the economy is being held up and the consumer is basically the strength of the economy, guess what? That's enabling the PPI and CPI and PC and all this inflation data to drop, and with what's happening basically with raising interest rates. So this is it's really weird, and I don't love it. I really don't. I think this is a very dangerous game they're playing, but if they're going to play this way, I have to trade based on what they're going to do. And again, I'll go more in detail with this going over the weekend, but I just want to go over the baseline of this now. Non-farm payroll, we've seen this beat time and time again, so I'm not really freaking out about it. It's just, it's not that big of one for me. I know people will freak out about it, and maybe if it comes out bad, it could affect us in a negative way, but I'm not that worried. I'm more concerned with unemployment data. But again, with the way Powell is referring to unemployment, it makes me think PPI, CPI, PC, those are the ones we need to worry about. Those are the ones we need to make sure are dropping. Everything else, basically Powell said, let's kick the can down the road. And again, we're going to go into that a little bit more here later. Then also this, before we go any further, investors pull $8 billion from major stock ETFs as of yesterday. One of the biggest offloads that we've seen on the market in years, people, in years. This is pretty scary, pretty dangerous, and one of the notions of caution that I'm looking at. So when I'm looking at positions, and I want to tell you right now, I did a day trade. I am not, holding things overnight right now. I'm still staying liquid. I'm being cautious overall as of right now. And then the last thing I want to talk about before we get into those charts is what JP Morgan said today. JP Morgan came out and said they expect in 2023 that the S&P 500 in quarter number one, so the first 3 months of the year, will test at least the previous or local lows so far in the S&P 500, which is pretty rough. They're insinuating about a 10% dip on the market, right? So I do want to highlight that, throw that out there. The good, the bad, the ugly, right? Everything is out there. So we can see that and everything in between. So as we jump into this, let's talk about what's really going on here. First thing we're going to talk about is volume. Now, I mentioned a few days ago, and I highlighted when we saw the upturn to the buy side, volume was it right here. We saw 120 million, started turning the table, right? Saw some selling. Then what happened? A lot of big buying. We started moving from 385 up to around 404, right? And then today we saw the big buying again, and then we hit 410. So volume has been the big tool and the big indicator as of recently. And when we look at these charts, I think we have to look at what's happening with volume. So what I want to do here first is go over the SPY. And what I'm going to do is something I really don't do often. I'm going to go to a 1 minute time frame from y'all, and I just want to show y'all what's happening here on the day. Okay, so we're just gonna look at the price action of today, and we're gonna break it down a little bit in depth. So what we're gonna do is go open up our indicators. I'm just gonna bring in volume for you, and I hate using volume on anything except TOS, but we're gonna break some rules today. Okay, that's what we're gonna do. So we're gonna bring that in there. Volume, you can see it down here. Now again, we're gonna just show you. Okay, it's gonna be a little bit hard to see. Let me zoom in a little bit so you can see a little bit better. But you can see this morning we had probably, it actually wasn't that much volume coming in. You had a decent about 10 million the first 20 minutes of trading. And then, you had some more selling coming in that pushed you down inevitably. But this is where things got interesting. Sellers would continue to try to step in, push you, and then you would make a higher low throughout the day. Again, sellers step in right here. You push up a little bit, and then you come back down, higher low. Come in, sellers step back in, higher low. Again, higher low, again, higher low. You can just see the going trend, and then eventually they don't step back in until around power hour, push you down, higher low. Very end of the day, push you down again, higher low. And to give you a better visual, go to about the 15-minute to look at the whole day, get rid of those indicators, and you can see what you're doing, right? Higher lows all day long except that initial drop. But I want to also highlight here for people saying, oh, this is a rejection, it's this, it's that. Now, you can't say something's a rejection while you're making higher lows, right? You need to start making lower lows, lower highs. You got to start seeing some type of bearish behavior before you can jump to conclusions, right? You're not my ex-girlfriend, right? You have to understand what's going on. You got to have probable cause before you start accusing people. Now, when we look here, you hit it, you drop, higher lows, you're still pushing up, right? Whereas before, you hit this level, rejection, immediate downside. Before, this is also similar. You possibly could do the same thing here. You hit the level, higher lows, and then eventually you drop down. So there is the possibility of that. But I want to say right now, you still don't look bad. And the big thing here is volume was coming in throughout the day to the sell side. But sellers could never take out or make a lower low. That was a really key thing in my opinion, specifically here on the SPY. Next up, we finally are seeing the cues shift. We've seen the cues finally come back to reality, and they're staying up to toe with what's happening with SPY. That's also very interesting here, right? We're finally seeing that behavior. Now, I made a comment. I've had to make this video twice because I've had some pretty big difficulties here with setting up the audio, and I don't want to talk about it right now. But as we get in here, I do want to highlight something. I made a comment a few days ago right here. I said, this is on November 30th. I've been very bullish on the Dow, but I'm not going to lie. If Powell comes out dovish and PCE reports well, the tech rotation will be good. This is the icing on the cake because Kramer starts talking about the Dow. Now, what's happened? Since that happened, since Powell came out with this little shift of the tone, yes, the Dow is holding up, but in comparison, the Dow doesn't look as good as the Nasdaq. It doesn't look as good as the SPY, which is a trend change. Does this mean the Dow is going to crash? No, but it means more money is going to flow into tech, most likely in comparison than industrials. Why? Because if we look at industrials, really quick, a quick example, Caterpillar, etc., they're all at highs right now. RTX, very high. Lockheed Martin, very high. I still like Home Depot, I'm not going to lie. It looks really good. And, look at energy, very high. I'm not going to say these can't run, but I think the potential for day trades is definitely with tech. That's my personal opinion. So as I'm looking here, I have to keep an optimistic head, and I have to keep a level head and look at more potential upside when it comes to tech. That's where my focus is going to be. Now, again, I did say Boeing. I loved Boeing. And again, I think I said, get a gun to my head. That's what I'd pick. And again, the reason why I said that was because the risk was so low. You opened up today flat, and I just didn't like it. I was like, I just didn't trade it, and I just haven't been able to get in it. But if you look here, you're still making higher lows. You're still pushing to this double top area. You want to break out and push towards that 185, 190 level. It's just moving too slow for me. That's why I haven't traded it. That's why I just haven't got into it. I still believe it's going to get the push up. Now, if we look at what's happening here on the indexes, let's talk about my expectations. If I'm looking here, it's really simple what my plan is. If I'm looking at Nasdaq, I want to see you get above 12.15. If you can break and hold above the 12.15 region, go to the 4-hour time frame, you can see, I believe you're going to get a quick push. Now, let me tell you where I think you're going to go. If I bring in the 200 MA, you have a few key levels here. You have the 12.5 level. That's going to be a big boy. That's a big one. You've got the 12.3. I don't think it's that major, but it's a tiny one. It's going to be a little bit of a resistance. But for all intents and purposes, above 12.15, I believe you have around 400, 350 points. Up to the 200 MA, you have a lot of upside room. I love it. That's what I'd be looking for. But I'm only looking to trade that upside if you can get the break above and hold above 12.15. So again, does that mean you go long and open? No, that's not what I'm looking to do. I'm looking for a break and hold of that key level, because if that happens, then it confirms to me that we are bullish and bulls are in control. Because despite all the efforts from sellers and bears to push you down, guess what? Bulls held you off with minimal bullish volume, and they were able to push you through on the preceding day. Next, ES, SPY. Again, it's doing really good. SPY is really clear here. If you can hold above 4,100, at least on like a 15 to 30 minute time frame, I'm looking for a test, and you can go all the way back to around the 2 hour. 2 hour gives you a better visual, but right here, your supply, 4,180 all the way to 4,215 roughly. That's your next supply level here. What you're looking for here, and this is what's going to really tell you if you're bullish still on the market. It's come down to this, and I made a tweet about it earlier, and I told everyone. The 200 MA, remember I mentioned it to you yesterday's video, right? The 200 MA was everything, right? You came, you tested our key levels. We had to break back down almost within 2 points of the 200 MA, and then you bounced. That's where buyers showed up. Now, as long as you hold this 200 MA, I am a bull, okay? No matter what, you could grind above this for 10 days. I would still be bullish. I don't care. As long as you are above the 200 moving average, the simple moving average, the end, that's all that matters. And it's about 40, 47 on ES right now. Food for thought. How have you reacted to this level? If we look at the past year, let's just quickly look when you've tested this and you've been above this level. Really, really quick. This teal line right here. Rejected. Rejected, 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 broke above and mounting so far here on the daily. The daily candle honestly looks fantastic. You're just consolidating right now at a supply level. I believe it's setting up for a push above. But again, the thesis can change. If you break below the 200 MA, then you have to become a bear, because we've seen what happens, and this could just be a bull trap. So that's the big thing to take out from here. This is a bull trap if you break back and hold below the 200 MA. That's how you know, okay? Very simple, very easy chart to read. There's nothing too complicated about this. Now, before we go too far into anything else, let's highlight a few bullet points here. When we look at something like the SPY, I want to highlight some of this daily action we're seeing here. It's really clear, and it's going to make you feel really good about tech. Higher lows, ascending triangle, came back down, retested VWAP. Looks really good, people. I'm not going to lie to you. All day you struggled with VWAP. End of the day, you ended up holding it. Really bullish behavior here. Love to see it. Looks like it is, and this is a bullish continuation pattern. So this is pretty good overall. Going into Qs, what's happening here? The same, if not better. Okay, the same, if not better. Why? So you're making those higher lows still. You obviously still have that top going on here, and guess what? Holding above VWAP. But you're much closer to those local highs. Qs, again, you have potential to keep running. Again, but it all comes back to the Nasdaq and the ES. So remember what I just went over specifically with those, because that's what's going to set you up moving forward. Now, I'm going to give you my favorite stock pick right now. This is the one that I day traded today, Microsoft. I ended up closing just because I was up a lot, and also you had kind of a double top here. But I want to highlight here. You look really strong. And I want to highlight my trade just so you can see. On Twitter, I recommend you follow just so you're always prepared. You get a lot of updates throughout the day. If you look here, went long on Microsoft. I was up about 800, and then I held a little bit, sold a little bit off, ended up making around 1,100 total. The end, that was the trade there. I could have made around 13, got a little greedy, held a little too long. Then my stops ended up hitting. So looking at Microsoft, where are you at? It's important we zoom out when we look at these charts. And again, I'm not looking to go long until I get confirmation from what? From the indexes, because the indexes are the sole indicator for me for everything, right? Indicator, it's MACD, all that on stocks. They're important. They look good, yes. But ultimately, you want to make sure you're following the trend of the stock market and the indexes, okay? I can't say that enough. If we look here, let's talk about what's happening. You've been below this level since essentially September 13th. You've been below the 250 range. Rejection, 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 rejection. That's been the story here. Today, you mounted it. You came up, retested 251.5, and pushed back up. It's arguably the most bullish behavior you've gotten in a while here on Microsoft. Now, Microsoft right now, let's talk about where you're going. If we look at the 200 MA on the daily, it's right there at 265. But I also want to highlight something to you. If we bring this line up just a little bit, let's see where this is. Right here. You have a daily gap here. Okay, people? Let's highlight. Let's zoom in here. Your daily gap all the way back from September 12th is right there. Guess what? That lines up perfectly with the 200 MA almost. Minimum targets here around the 260 level. So if we start to get a breakout on the Nasdaq, I think Microsoft is one of the better plays out there. What did I say yesterday was one of the better plays? I said I liked Boeing because it was probably the safest, but I said the most potential upside was what? It was NVIDIA. It was semiconductors. NVIDIA. What happened? You went straight up. Again, my opinion, what I'm looking at, what I'm looking to trade, giving you guys food for thought. Right now, I'm liquid, right? I'm being pretty cautious with how I'm trading right now because we're not out of the woodworks yet. We haven't held above these key levels yet. Once we hold above them, then you're pretty bullish if we mount this 200 MA. But as of right now, we're looking better and better. So I just want to highlight where we're at. Now, before I let you out of here, let's go over a few things. Going into the VIX, I want to highlight this. We have the Fed meeting coming up, and you're setting up interesting here on the VIX. You're coming back down to that $19, $18 level. We can look over the course of the past year. Look what's happened. When you come to this level, you've usually gotten a reversal, right? Boom, boom, boom. And everyone's talking about the VIX right now, but I want to highlight something. What usually happens though here? Do you usually come straight down and bounce straight up? No, you don't. That's why I told y'all right here, be cautious when you bounce straight up here. Be very cautious. Usually you base, you come down, you sit here for a little bit of time, a few days. Right here was maybe your only time you really bounced up, right? But right here you based, okay? So I want to highlight very few times. So if we look here, out of 5 times, only 1 time have you just bounced straight out of this level. So it is possible. So everyone out there, just know it is possible. I don't want to hear anyone in the comments. I try to answer all the comments as well. If you have comments, leave them down below. But that's what I'm expecting. And what will happen during this basing time? Most likely, the market will continue to run. You'll probably still have more upside. Just because the market's going up does not mean the VIX has to go down. We've seen the VIX consolidate plenty of times while the market's going up. It's simply a measure of the derivatives market, specifically on the S&P 500. So you need to understand what it is. It's not an inverse ticker. That's not what it is. You got to know that also. That's what we're looking at. The DXY. A lot of people commenting about the DXY. Again, I've been trying to tell you all about the DXY, but people usually just want to listen to whatever they want to hear. The DXY was an excellent indicator, and it still is, but it's less relevant since you broke below the 109 level. When you were above this 109 daily level, when you were bouncing, that's when it was most important because we would see instantaneous reactions because the dollar was so strong. But as the dollar weakens and you get these smaller bounces, it's less reactive on the S&P. So is that saying it's less important? No, but it's going to be less reactive and less of an impact, okay? That's a very important rule of thumb to know here. And you're also coming back down to this key level, going back all the way to 2022, June of this year, the lows you had of June at the 103.6 level. Worth mentioning, want to keep your head on a swivel? That's where I'd be looking for this to come down to. Going into yields, I want to highlight the 10-year, 4%. I did say probably unlikely to come back to 4%. Okay, you're still dropping here on yields. And I think this trend is probably going to continue. Again, this weekend, I'm going to have a detailed video of the long-term aspects. Really not that long-term, about the 1 to 3 month aspect of what I'm looking forward to with Powell. But if we look here at the inversion, again, let's look just the overall scale here. I haven't even been up to date with this. I've literally been watching with you guys. You're still holding the higher low trend. If this starts to break also, I think we can get a rally on the market. I'm telling you, as this inversion drops, it's going to be pretty big. And just know this inversion has held, or the higher low trend has held for 2 years so far. Pretty interesting, pretty important, worth mentioning, worth noting. So all these are very important right now. But the big thing to realize here is that the inversion is still holding up even though these indexes, or even though the yields are dropping. And why? It's because the 10-year is so directly connected to the 30-year. And you want to see those disconnect over time. The 30-year should be far more valuable than the 10-year. Why? Because the more time implied on these yields, relative should have more value. That's just the way it should go here. So a 30-year should always outweigh the value of a 10-year. I don't want to do an economic lesson here. You don't want to hear that either. But that's what we're looking at here. So right now, favorite stock of the day, I'm not going to lie, Microsoft. Semiconductor still probably have more upside, still look really good. I like Apple to 150. Tesla, I do believe Tesla is probably going to test 200 pretty soon. It's setting up for continuation also. I do love what I'm seeing here. I'll see you tomorrow. Make sure if you have questions, ask down below. Again, have a good one, traders.